Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for week ending June 20th, 2014. Um, Triple witching. We had a number of option rolls that took place. We had the monthlies, we had quarterlies, we had futures. Traditionally, in this type of week, you tend to have a little bit of a grind higher and volatility stays low, which it is. What I've got on the screen right here is a chart of the E-mini futures, and you can see here I've got this channel on here. We've had it on for quite some time, and this thing seems to be following the channel very nicely. You can see this thing actually started back in this area here, which was around going all the way back to the Q4 of 2012. And then we fairly held consistent in this channel. Um, and we're now smack dab in the middle of the channel again. Generally, when we're up the upper boundary of the channel, we're coming down to the lower. And then we're down to the lower, we work our way back in. And only just a few times since Q4 of 2012 have we been out of the channel for more than a few days. And that's just those times right here. Otherwise, we've adhered to this channel just that time there and that time there, and only for just a few days. This time right here, it was an intraday movement outside the channel, but we closed within the channel. So this is just truly impressive. We've had a great run. Now, how much higher can we go? That's what everybody wants to know. You can see right here, I got some Fibonacci's on here. We'll go take a look at these in just 1 minute. I'll blow the chart up. But there's nothing really in the way of stopping the markets from moving higher. I do believe as the optimism in the market continues to grow, that makes it more susceptible to a downward move. But we're clearly well above the 50 EMA, well above the 200 EMA, and just smack dab in the middle of the channel. Now let's blow it up and just kind of take a look at this past week, and let's take a look at kind of where we've been and where the odds favor us moving. As I said, this past week going through June 20th was a option expiration week. And in this week, especially triple witching, quarter in, month in, a lot of adjustments going on. The tendency for the market is to move up. And you can see here, Monday through Friday, that's pretty much what we did. I mean, if we started off on Monday and I box it out, that's what we did for the week. We moved higher. We actually opened Monday right around 1227, sitting right on that Fibonacci extension. And then we closed the week right here, just slightly above the 1618 extension off previous pivot highs and lows for the E-mini futures. And we actually made a new high on Friday. Not that high right there. So we actually made another new high. We didn't close there, but we came in at 1956.75. So that's a new high. And then we closed right here. Now, the week after option expiry, traditionally, at least from my experience, we'll see normal market conditions. We'll see a rise in volatility, a little bit of a pullback, a little bit of profit taking. I don't think we'll see a lot. But one thing I do want to show you here, for those of you technical fans out here, we're getting another divergence possibility setting up here. If we have a little bit of a pullback, which I believe we'll have, we may take out that 1956.75, go a little bit higher. But then we'll probably get a little bit of a pullback. And when we get that pullback, you're going to get a MACD that looks like that. And that gives us our bearish divergence, which means we're going to come back down more than likely and test that 1938.50 area. And certainly the 1948.09. Now, these are the E-mini futures. That's what I believe can happen this coming week, which will give us a little bit of a pop in volatility. This does not mean that we're bearish. This just means for those of you very short-term day traders out there, I would be looking for a little bit of a pullback. Now, you could see here this was a very bullish sign. We came down to 1919 at the end of the week before last when we had that pullback, and then we completely took it all out, and we closed just slightly below the high of the previous week when we had that nice little pullback. So we're sitting right in that area here. But this does set us up for a bearish divergence trigger opportunity. Okay, now if I swing in and let's zoom in just a little bit more. We'll look at the 2-hour chart. You can see here with the 2-hour chart, there's really not a lot of bearish divergence at all. You can see right here where we took out the previous high, 1954.87, and we're sitting right here. We made a new intraday high, and we're sitting right in this area here. Although there is a little bit, just a slight, very slight, you might not be able to see it, a possible bearish divergence if we move down here like that. We made a high here, and then we're not making a higher high, but from here to here, it is a higher high, right? So we've got that divergence in the price action and the indicator. Near-term divergence would suggest that we're going to get a pullback. Of course, this is the 50% of the fib pullback, and you can see where prices did hang up at that level. Again, on this 2-hour chart, that was for over 2 or 3 days in this case right here, 3.5 days. You can see we can hang up here. That's why I suspect the odds favor a little bit of a pullback. Not a large one, okay? I don't see anything that's getting in the way of causing a larger pullback, but I do see that coming to fruition here with this setup. Now, if we look at the Russell, because this is one that I've been pointing out a lot, we've gotten our trend change here with the rut. You remember I talked about this on prior weekly updates where we've had these lower lows, right? Where we've made these lower lows and we made these lower highs coming down. And then finally, we took out this high right there. We took out this high right here with this high right there. And then this was our key pivot. We didn't quite make it down. We stopped right there. And then we made another new high right there. So we're taking out these prior highs. That's a very bullish sign because then we came down, we made a new higher low there, like that one there. And now we took out that high with this high here. Folks, that's a classic definition of a trend, higher highs and higher lows, or in this case right there, lower highs and lower lows. And I told you that this is what we want to watch for, and if it does, then we're going to have a quick run up to 1270. So what are we watching here for now? The rut, and why the rut? The rut is a small and medium cap, but mostly small cap, higher beta. And the small cap got decimated in March. We want to see the small cap come back. If we see the small cap start to come back, then that tells me that there's more money coming into the markets in a risk-on environment, meaning they're willing to take more risk, meaning they're willing to put money into higher beta, smaller cap stocks. That's going to be good for all markets, and that means we're going to get a faster run-up in the Russell. And that's what we're getting right now. Okay, so this is really good. Now the key for us this week, here's a key pivot point for us right there at that level right there. You can see if I extend it, it was a resistance point right there. So it turned out to be a resistance point there and a support point there. But that's going to be a key point for us. Should we break that? And the other thing that I want to point out is there's the 50 EMA sitting. It'll move up into that area. So if we break all of this and that natural price level, 1141.10, we're going to come down here very quickly, 1120.50. And I think we'll probably find that very quick. I don't see a lot of buyers stepping in at that price level. It's a natural price level, a natural support point, which means at that point, the 200 EMA is going to be closer to it. So it's going to serve as kind of a support zone for us. We got to watch that because there is a prior pivot right there. If we come down to that area and take that out, then that negates this run up. We're going to pull back down. We're going to test that area there. And then we're going to see further degradation in the E-minis and the Dow. All right, so that's what we're watching for. I would suggest you watch on the rut. See how the rut plays. I mean, that's the key area right there. We don't want to take that pivot low out. We just don't want to do it. Now we got a high and a higher high here, and there's really no bearish divergence there to speak of. So I'm not seeing any signals there that would suggest we would go down beyond this point. Now, as I always say, this is the side of the chart you trade and it's empty space. So what you got to do is look at what the action is over here to help guide where your bias is going to be here. So that's the way the charts are stacking up right now. A couple of other really interesting moves here. I talked about volatility. Volatility finished 1085, very low. Okay, I mean we're still down at least given the past 4 or 5 years, or 6 years, 7 years, we haven't been this low in vol. You can see this 1105 number over here occurred back here in 2013. But we haven't, if we're coming down to this level down here, we haven't seen these levels since 2007, around February 2007 to be exact. So I do believe the odds favor vol to come up in this area right here and kind of settle back in a normal range in this area here, which has really been the area where vol tends to find a bottom. Okay, the fact that we extended down to this area down here just tells me that there's a little bit of complacency in the air in the markets. I'm not getting a bullish divergence, but I'm getting a little bit of an upward slope of the MACD. So that tells me that we should be prepared for a rise in volatility next week. It may not happen, but I'm just saying the charts are telling me that we could get a rise in vol and a little bit of a pullback in the market prices. Okay. Now there's a way that our members are following along with what I'm doing in trading volatility, and we're doing very well. We're knocking the ball out of the park. If you're not a member, I would highly encourage you to check it out. Join us. We added a new monthly membership option, so you should check that out. I think you'll find it very appealing for you. But looking at this, if of course the least expensive way for everybody is for an annual membership. But what I'm doing with the monthly is try us out for a month, and then I'll give you an upgrade opportunity, and I'll discount the month for free. So it's a good way to try everything out here. But anyway, you can see where the volatility is. We're down at all-time lows, which means the odds suggest a move up. We've been playing vol this year. We've been doing outstanding with the way we trade vol. It's worked out very well for us. Now, something else I wanted to show you, which is very interesting, and that's bonds. Bonds have been moving with stocks. Traditionally, bonds move down when stocks move up and vice versa. But we've had this interesting play with bonds over the past few weeks. You can see here bonds had their run up. We hit a key resistance point. We came right back down into this solid area of support. It was resistance over here, but now it's support in this area right here. So we're now sitting right in this area here. There's the 50 EMA. We're sitting almost right on it. And the odds favor bonds, by the way, to go up a little bit higher. But I'm a believer in shorting bonds, having them come down to this area down here. You can see here that bonds are, and the reason why bonds are harder to trade this year than they've been in the past is because they're artificially stimulated by the Fed's and Janet Yellen's policy of low interest rates until we all pass away. But that's going to give way pretty soon, and Mr. Market's going to take over, and it's going to move bonds back in that direction, which means interest rates are going to go in that direction right there. Now, if you don't trade bond futures, then you trade TLT. That's a very good option for you. TLT goes in the direction of bonds, so when bonds goes down, TLT goes down. Or you can trade TBT, which is like trading interest rates. And when TLT goes down, TBT goes up. So, you can pick whichever one you want. I like bond futures and TLT. They both they match up very nicely. But, TBT is another good one that you can do. So that's where bonds are right now. And we had buyers coming into bonds, and it finished up on Friday. So it's just, I find that very fascinating. The other one that we did that we've had fun with is the euro. We took a short in the euro, And you can see this is FXE, but it simulates the Euro futures. We took a short in this area here and rode it all the way down. Um, I suspect that, and as I told my members, we're having this little bit of a bounce right here, but I suspect it's going to come back down, test this area here, and probably break it and go lower. That's what I think is going to happen to the euro. Near term, we're getting a little bit of a counter trend rally here, but I think it's going to find a little bit of weakness and then roll back over. Meanwhile, to the northeast of the ECB zone is the British pound. Here are the pound futures. We're bullish the pound. It came up and did what I said it would do, which is at least what the charts seemed to indicate it would do, which has come up and hit this area here, 170 point or 1.7043. All right. I mean, we hung out at that area for quite some time, and I told people that on this pullback right here, this pullback would be a good entry point, and you've got a very good stop point here that's been solid support. So you had an entry point right there, and you had an entry point right there. The first entry point you would have given up just a little bit. You would have had to hold it, but you'd be good. The second entry point was another entry point for people that didn't get into it. And now we're sitting right at this level here. I believe it's going to go up higher. Longer term, the pound is just it's going to run up. Okay, I think it's going to run up probably to right around this. Let me zoom out just to give you guys some perspective on where this thing can go. Here's the weekly chart of the British pound. Okay, I do believe that we can come up and test this area right there. All right, that's a nice run, about 193, 194. If they start raising interest rates in Great Britain, which is what they're looking at doing, we can have a run up there. Now, it's not going to be a straight run up. We'll probably encounter resistance right in that area there and right in that area there. But I do believe that would be the run up that we can expect. So we're on an Elliott Wave 3 count. You can see here it's projected an Elliott Wave 3 up to that area already. And then a final ditch move up in that area there. But I think this has got a longer legs to run. So we're bullish the pound. You know, that's one that I like. Okay, so the pound. Now, the yen, I'm more bearish the yen. And as you can see here, this is a weekly chart. We traded the yen, by the way, this big move here, we traded that all to the downside. It was a great trade for us, okay? Let's zip into the daily chart. Now, on the daily, you can see right here, I'm not calling a trade on this yet. We're still in this sandbox. And when we get to the bottom of the sandbox, we go higher. When we get to the top, we go lower. If we can break this right in that area there, we can break that. We'll test this pivot right here, I suspect. If we can test that pivot there and break it, we're going to come down and test that area. Now, that's what I think is going to happen. It won't be a straight line. We'll probably do one of these kind of things like that where we come down and then we boom, boom, and then next thing you know, boom, there we're there. It'll look something like that. But you can see right now there's no trade. We're just trading a range. We need a breakout. Now, the breakout could be to the upside or the downside. I favor a breakout to the downside. I think the yen has very little room to run to the upside, but I think it's got longer room to run on the downside. So we're looking at shorts in the yen. They're not ready yet, but that's kind of what we're looking at. An interesting play this past week was gold. We did not take it. But in looking at gold here, let me just get a weekly chart on here, see if I can get on here. You can see here with gold, in the scheme of things, we had a lot of bullish divergence in this weekly chart, a lot. From this point right there to that point right there, you can see that and that. And that bullish divergence right there, folks, we traded. In January, we got right there and we got long gold. I said that would be a good trade, and we rode it all the way up to this trend line right there. It hit the 50 EMA. We got out a little bit early, but it came all the way up to the 200. I'm sorry, not the EMAs, but right up above the downsloping trend line here, and then we got out, and then we've just been drifting like that. Now we're running a little bit higher again. So let me see if I can get this daily chart up here for you guys. Let me just see. So what I got here is the daily chart. You can see it up right here. We came down and hit a natural price level, which held up very nice here. The 1239.6. It held up very nice here. Then we broke this upsloping trend line. We took out a prior price level. We took out this 1300 area, and now we're sitting in this zone right there. If we can take out that 200 EMA, which is an important number there, then I believe we can run higher and we'll challenge that pivot. I'm not entirely convinced yet, but gold has moved up strongly because there's starting to become whiffs of inflation. And gold is traditionally an inflationary hedge. And the reason why gold just plundered so much the prior year is because there's been no inflation. So if we catch wind here, some longs are going to come in and bring this thing up to this area up here, which is around 1390. Okay. Now, we played this move right there because we had a good trade, right? We had this bullish divergence. It also showed on the daily. It showed on this one here. There is a longer term bullish divergence here on this daily like that. Not as steep, but it's bullish divergence. So the trigger was right there. But like I said, we did not take this trade, or I didn't take this trade. This was the one that we took, which I thought we'd have more juice in, and we did. So now this one here, if we can get through this, then I think I'll find it more interesting. If we roll back over, then again, I'm going to stand aside. The other one that's interesting this past week is oil. Here's the oil chart. And as you can see, oil has had a very nice run up. Some of it, about $3 to $4 a barrel, is the geopolitical risk in Iraq. But you can see on this 50-day how the 200 EMA held up very nicely, providing good support, and then we've run up higher and higher. So this thing looks like it wants to still run up higher. We're not getting any bearish divergence in this thing. So there's no reason at all why we can't come up and approach 110 a barrel. But once we start getting up in these levels up here, folks, up in this area right here, I'm gonna be looking for shorts. Okay, that's what I'm gonna be doing. But right now, I think oil can go higher, and the energy sector is doing very well. Nat gas had a pretty good little rollover. You can see right here, we came right up to our resistance point, and it just stopped it dead in its tracks. All right, and I do believe that the 200 EMA right here, which is at 4.369, is going to hold nat gas. I don't think it's going to go down. You can see here and here, it held up very nicely. Should nat gas break this area here and come down, then naturally we're going to look for that area to hold. But I don't think it's going to. I think we may come down here and do one of these kind of things and kind of trade in a tight range like that for a while. All right, I can extend it out even more, and that gives us the range. So I think that's kind of where we're moving to right now. So the near term for nat gas is down. We haven't been in the ag markets. There's really nothing to look at. We will jump into the meat market. Our members, I'll go through that trade in detail Sunday night. There's some really interesting things in meats. Coffee, we've already taken our profits, so congrats to all you members that followed us along in coffee. And then we got a number of sectors that are playing very nicely. The energy sector's doing very well. Several other sectors also. We'll go through those this Sunday night in our Sunday night session. So just as a wrap up, I hope you enjoyed this. Remember, if you're not a member, you can come in on a monthly basis. That's a good way. We've had a lot of people do that. We've had some members come in on on an annual basis too. Just go to our website and check out our membership options, and you'll be good to go. Check out our special offers as well. It's the button underneath our video on the home page. I think you'll find something there that you like. Otherwise, have a great weekend, everybody, and I will see our members tomorrow night. Bye now.